Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Friday, the 13th edition of Benzinga's PreMarket Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. Looks like we all know what the top story will be today, at least for the morning, and that is those bank earnings coming out. We had Wells Fargo come out just a few seconds ago. JP Morgan is out. Bank of America is out. PNC, BlackRock, they're all out as well. So that'll be the big story we're discussing at the top of the show, and we'll go from there. Our guest will be at 8:35. She is Nicoa Duke, an analyst at Futures Tech. Has been on the show in a few years, so we're pumped to have her. I think we're calling her over across the pond. I think, Joel, if that's correct. So tell us what we're doing in the S&Ps this morning.
Quiet session, trading higher by $3.50. Toward rallied yesterday, 48.50. We rallied over 20 handles. We'll discuss that a little bit with Dennis. Keeping an eye on the upside here. Wednesdays and Thursdays highs right at the 22.71 level. All-time high, 22.77. On the downside, haven't even taken out the close of 22.6350. Crude giving back a little bit of its two-day gains here, trading down 40 cents at 42.61. And gold got over 1,200, but had some profit takers here, trading down $2.20 at 11.9780. Dennis, have you decided what to do with that JP Morgan report yet?
It's interesting. These bank reports are kind of mixed here. So you got JP Morgan and Wells Fargo is just hitting the tape here right now, coming out at 8:01. Wells Fargo, they are hitting them. JP Morgan, they're buying it a bit. Bank of America is just kind of hanging out. It's down a little bit now. It's been bouncing around. Spencer, you got to jump into the details here. Let's go right into the Bank of America report because we've had that one for a while. It was the first to come out earlier this morning. And Bank of America is down about 1% here in the pre-market. But coming back from the lows, what do they have to say?
Yeah, BAC reported there this morning, like you said, Q4 EPS 40 cents versus 38 cents. That's a beat at revenue, 20 billion versus 20.9 billion, so that's a miss.
Stocks low, pre-market, Joel?
Pre-market low in Bank of America, 22.65, just hanging out above that level at 22.72.
And what do you think on the technicals here?
I'm going to go a little farther out here, and I'm just going to say until we can clear, 5-6 highs here at this 23.30 area. I see 3.30, 3.39, 3.32. Until we take that out, I think we're looking for a correction here. That's it. That's a big technical level. We've formed it. We keep selling off under 22 here, but I'll wait for that level to come up. Also, many highs in the lower 23 handle. So for me, staying bearish until we take out 23.30. On the downside, 3 lows at 22. Oh, a bunch of lows at the 22.50 area. So tight, 22.50 to 23.30.
I mean, very mixed reports here. Let's look at the JP Morgan report here, Spencer, because it actually looks pretty good. The top line or the bottom line looks like a big beat here. Stock's not trading up much though.
So this is interesting. Q4 EPS $1.71 versus $1.44, but that may not compare, partly due to a $475 million tax benefit that they got during the quarter. Q4 revenue $23.4 billion versus $24 billion, so a slight miss there. Big beat on the EPS, may not compare, slight miss on the revenue.
It's starting to leak, and it's actually just going negative here right now, or just playing around with 86.25 right around with settlement there. Like we said, Bank of America is weaker, Wells Fargo is weaker here. Quick technicals, JP Morgan, then we'll jump into the Wells Fargo report.
I mean, show me you can bust out through 87. Show me you can make a new high of the move. Show me you close in the 88 handle. If not, just too much resistance up there. Coming back on the downside, been in a trading range for quite some time here over the last month. 85 even's the bottom of that trading range.
It's a whimper, and the stock's starting to leak here too. So these bank earnings reports are not getting the market very excited here. Wells Fargo too. Wells Fargo doesn't look good either. Spencer?
I was on mute. Wells Fargo Q4 EPS 96 cents versus 97 cents. Revenue 21.58 versus 22.45 billion dollars. So beat on the revenue, slight miss on the EPS.
Stocks. Now, all of these stocks just kind of, I'm going to say, just hanging out here because really we're not getting hit hard here either. I mean, Wells Fargo's only down 35 cents here in the pre-market. JP Morgan's down 9 cents. Bank of America down 20 cents. So, again, the problem here is even if you get a pullback in these things, I don't think the pullback is significant because there's so many people who want to own the banks. And I think you're going to have those people who buy the dip just sit down there waiting for a dip, hoping, that some of these banks could pull back. So that's why I don't think you're going to get a significant pullback, even if even if the reports were really bad. I don't know how, significant the pullback was going to be. The reports are just kind of wishy-washy, beating on some. There's nothing, great here. So that's why I think you're just slightly seeing a pullback here. But again, a lot of, what do we say, underneath demand, Joel?
Yeah, underneath demand. I'll tell you, though, Dennis, I mean, these stocks have had excellent runs, right? Going into the report. And what do we say? When you have these excellent runs, if you don't blow things away, then I think it's hard for them to continue higher. So right now, I don't think they've blown anybody away with these earnings reports. And there's just too much, air underneath the things for me. I mean, even if I'm trying to buy a dip in the bank and the Wells Fargo, I mean, I think I'd have to wait for the $52 area. I'm not going to, step in here in the 53 handle. I mean, 52 is where the major support is.
You're gonna need some more account fraud here for Wells Fargo to go back to 52, but I just don't think I don't think there's going to be that significant of a pullback on any of these things, just because everybody is talking so big on the banks, especially still with Trump coming in as well. Hard to get off the bullish bank bandwagon here, so I don't know. I almost sense a bet coming on here, Joel.
In Wells Fargo?
Oh, pick your poison. Which bank do you want? I'll go any of them. Bank of America, JP Morgan, or Wells Fargo. I don't think these stocks can pull back, well, let's say like 5%. I don't think you're going to see a 5% pullback. I'm not saying they're going to do it today, but I would say, they probably are more prone to rally 5% from where they are right now than fall 5%.
All right, so J.P. Morgan, that's the closest here to trading unchanged at
86.
86. Okay, how about?
I think it could see a new high. So the high on the move, 87.76. I think it could see 87.77. So that puts it up $1.70 here. Knock $1.70 off is 84.30. I'm gonna do that. I'm gonna offer you 84.30 versus 87.77.
I mean, why don't we just make it easy? Why don't we just go 88 versus 84?
That's a big hole number.
Oh, all right. I'll go with you.
87.99.
No. What?
New high. I think it can make a new high on the move. 87.76. Not today, but I'm thinking it has more prone to go up $1.50 from here than down $1.50.
Okay. I mean, the trend
So
is...
I'm going with the trend. I'm going with there's a lot of underneath demand here. And I don't think it takes out that 85 support.
Okay, so what do I have? You have 87.77, then what do I have?
I don't know. Spencer could do the air math. We went odd numbers here.
No.
Let's just go.
No.
Let's go.
$1.70 up, $1.70 down from 86.05. That's right where it's at right now. So get your calculator. Ace, get your calculator out.
All right. Well, we'll know. I like 84 versus.
Well, no. Joel say we'll know when we know.
We'll know when this thing
That's
hits.
how he gets me on the
when
list.
it hits.
His lunch bet is on. I think JP Morgan can hit a new high before I down 84.30.
Okay, done. Sold.
We're on. We got a lunch bet. Look at that. Friday lunch bet.
Finally.
I'm excited. Excited. Go JP Morgan. Come back.
Chat. What side are you guys on here? And don't say.
It's funny. I could make a trade, and I get more excited about winning that lunch bet with you than if I made like whatever on a trade.
All right. JP Morgan, that's on our radar. What else? Let's move on.
All right. So you had the big three banks. You also had some smaller ones report here this morning as well. PNC Financial and BlackRock. Spencer, give us the numbers over there. And these are just kind of hanging out too.
PNC Q4 EPS $1.97 versus $1.85. Revenue of $3.9 billion. That was in line with the estimate. So a slight beat on the EPS and an inline revenue report. BlackRock reported Q4 adjusted EPS of $5.14 versus $5.02. So a nice beat there.
Stock just kind of hanging out. Both of these not really doing anything. BlackRock here, it's a $379 stock, just trading a few odd lots, traded 1,000 shares here altogether this morning since the report. So just hanging out, not doing anything, Joel.
All right, let's take a look at BlackRock. I'll just give you one number on the upside, one number on the downside, the number on the upside. Oh boy, it's long away from the all-time high. Oh man, 379. I'll go with the pair of highs at the 85.5 level on the upside if we go into rally mode. And if we go into severe decline mode, I like the 371.50 area, two lows, double bottom there as well.
Okay, so that's the big earnings. So now let's go to guidance land because we've had a few. Last night, Pandora came out and they shot this thing out of a cannon from 12 to 13. They said lots of good things last night, Spencer, after the bell. Pandora up 8%. What do they say?
They see exceeding their Q4 outlook on the back of subscription momentum and RPM growth. One of those things that they say they've surpassed 4.3 million paid subscribers. And they will reduce their U.S. employee base by 7%. Shares were up. After that, they're leveraging their ad insertion logic to drive sales and a whole bunch of other headlines like that. But better than expected sales numbers and strong subscriber growth is what they see. I use Pandora every day, but I don't pay for it, so I don't know who's paying for it.
What do you mean? You don't have to pay for it?
No, well, it's like everything. There's a free version. There's a non-free version. For the free version,
Does anybody pay for, or does anybody use the paid version?
apparently, the non-paid version has obvious limitations, but they're okay with me.
What do they just advertise to you? Is that what the
Yeah,
non-paid
and
version is?
you can't skip. You don't get unlimited skips. And there are
Ooh.
occasional ads. And that's pretty much it.
You know what the biggest problem all these companies up? They all start up and they don't cost anything. I mean, it's hard to make revenue just on advertising. So many different ways to advertise here. So I don't know. It's difficult. But anyways, Pandora here. Forget about the 12 handle. We just don't even worry about that. We traded upwards of 12 yesterday, blowing right through the entire 12 handle to 13. Joel, technicals.
This is a tough one here because you're hanging out in an area of five highs here between 1310 and 1320. Just below that, the pre-market high comes in here at 1310, but you're not really backing off, and so that tells me there may be still some pent up demand here to take this issue through that area. Above that, I'm looking at 1346. That was your high in the 28th. Underhand, if you buy that open at 1304 and you're looking at 1288, 1285, I think you're going to have to cut loose. Needs to hold 13 or get back some of these overnight gains. But hanging tough for now.
And then you also had guidance here and holiday sales from GameStop this morning. I got lucky on this one. I just happened to be shorted overnight. So whenever you get a big win like that off of something, off of good news, just out of the blue, I consider it like, just good luck. It wasn't due to good trading skills or anything like that. I just happened to be shorted, and they come out and the stock's down 9% here this morning. So I always say when I get that big, gain overnight, I wasn't off of my trading skills, just off of good luck. I kind of throw it into the good luck piggy bank because one of these times I'll have something overnight and it'll come out with, bad news for me and it'll go down. So this money will go back out of the good luck piggy bank and then come back. So, I'm feeling good because I'm up pretty big in the GameStop trade. But I just got lucky that I happened to be short it, and then they came out with guidance.
What you do? Just leave an order out there or something?
No. I have, I trade overnights all the time. So, for different reasons, for order flow reasons usually. And I typically have 30 to 40 overnight trades every single night. And I just happen to be short GameStop. So there you go.
You bringing it in? I mean, I do see a pre-market low.
I brought a little bit of it in. I'm still sitting here. The one thing I will say, when you get luck, it's key to maximize that luck. So, I don't want to sit here. The holiday sales, Spencer, give us the numbers because the holiday sales were terrible.
Well, yeah, the guidance isn't so bad. The holiday sales, same store sales, down 18.7%.
Wow.
That's the bad news. The guidance itself didn't seem so terrible to me. Q4 EPS, $2.23 to $2.38. That's the range. The estimate was at 2.32, so right in the middle of that. That's fine. The fiscal year 2016 EPS, they see $3.65 to $3.80, 3.72. So again, right in the middle of that range. So not so bad there. But the 18.7% decline in holiday same store sales, that's the problem.
Ugly, ugly, ugly holiday sales. And I'm looking at it here. It's in the 22 handle. I have covered half the position here in the
Okay,
22
good.
handle. I'm thinking, it's pretty good. To 8, 9% windfall here, just like that. Hard not to take some of the gains. Just going to hold on a little bit longer here. I was hoping it could get down to 22 bucks. Not sure if it's going to or not. It's 22.70. I'll probably cover the other half in here sometime.
All right.
Sometime, maybe even on the show.
Pre-market low 22.31. I see a low sticking out at 22.19. That was on November 15th. And that's you could also look at the opposite way is that hey, you just kind of got lucky. You had the order in there. Why don't you just try and book it?
No, because you know why? Because, like I said, I happen to be in this from last night. The guidance came out this morning. So if you just booked a gain immediately saying, oh, I'm up a buck, oh, I'm all excited here, not maximizing it. Well, on the other end, when I happen to be on the wrong side of the news, I could get really hurt bad. So, like I said, it's key to maximize those gains and minimize the losses when the news works against you. And then that is good trading skills if you can do that.
Yep.
So, as a point, if you decide I'm going to cover the open, then you would say, that takes all trading skill out of it because that's just the way you do it. But I try to, cover pre-market. I try to go on field. I try to get, interpretation of the news. I would say, one of my main trading strategies here, and if you want to talk strategy for 5 minutes here, we can do it, is interpretation of news. I mean, you can be a news trader and you can look at the news and say, okay, well, it's good news, I'm buying or selling. Some things are very obvious. I mean, stock is taking over $25. Stock's going up to, towards $25. But, there's other interpretation too. I mean, even on these earnings reports in the banks this morning, this is a lot of interpretation here. That's why you don't see, clear cut, stock going up, stock going down. So it's on that news interpretation where humans still have an edge over the machines because the machines are just reading the numbers, but they don't have those analytical skills themselves, that a human being does to really interpret it all. So if you can understand, how that impacts certain things, sometimes the interpretation of the news is where a human still has an edge. And that's why I say, you get like a Benzinga Pro, giving you the news there. You don't have to have the news on the split second. If you have it 5, seconds or 10 seconds, it's enough because it's all about that interpretation of the news. You're never going to beat the high frequency trader to the punch. You're not going to, beat them in a millisecond here. So there's no point even worrying about the first couple seconds of the news. But, as long as you got it, it's those next few minutes where you get those overshoots, on the news where, okay, well, no, this isn't that bad. Let's think about this for a minute. Because, rational thought takes a little longer than microseconds there. And a lot of times there's money to be made in interpreting the news.
All right. Well, then can I cancel my J.P. Morgan bet?
It's going up. It's going up. It's trying. I'm just saying. See, I'm using, so when I do that JP Morgan, I'm not only interpreting, I'm looking at the report and saying, okay, this is my thought process in JP Morgan, why I made the bet. So I'm looking at the report and saying, well, the report's not that, it's pretty good. Pretty good report. Typically, I say, and I know you were using my own words against me a little bit with that bet, saying, a stock runs up big time here from 66 to 86, I gotta blow it away. That's historically. So that thought process is in there, but it's different this time. Why? Because everybody loves the banks right now. And everybody wants to own the bank. So they want any reason to own the bank. So you have to use that in your interpretation as well. So here's a report. That's okay. And here's a stock that probably has so many people that are just itching to get into it that any type of a pullback they're probably going to come in. And here you are, JP Morgan is starting to try to pull back a little bit. It's already moved back to the green here again. Now we'll see what happens at 9:30 when the real money comes in. The real institutions, a lot of them don't trade the pre-market, they don't trade till the regular session. But when the real money comes in here, I think any type of a pullback gets bought in all the banks just because the market is too underweight that sector.
All right. I mean, great analysis here. Well, the proof is in the pudding. J.P. Morgan up 16 cents here at 86.40, almost 400,000.
Gotta go another $1.30. And I get one of those lunches back from you.
Okay. All right.
Actually, I think we're even, aren't we, on the lunches? Because I
Yeah.
bought you a lunch.
Yeah, you paid up on that. Fuzzy is coming in with a couple stocks here. Bearish Merc yesterday AM, that
It worked
$63.
again.
Yeah, it
The
worked.
63. We said it on the show yesterday morning. $63. You know, if you're selling it up there, it's been working. It worked again.
All
So
right.
I don't know. I guess it's 2 days in a row. I know Bob Wire played it the first time. I don't know if he played it again there, but if you're getting short up there at 63, it appears to be working. It's like it's allergic to the 63 handle. It gets up there and fails. Did it back in December, and then it's done it a couple times here, 2 days in a row here. It's a lot of, people in this stock is kind of the opposite. They don't love the pharma stock. So there's a lot of people willing to take money off the table. It's the exact opposite of banks when you're talking pharma right now. And I love pharma long term. Merck is still one of the core holdings of my investment portfolio, but short term, pharma is still out of favor here, especially after those Trump comments from 2 days ago. So it's hard to just say, oh, we got some good drug news. Let's just buy Merck hand over fist, because the whole sector just has this weight over top of it, and we're worried about Trump coming in and doing something with drug pricing here now, and that's why overhead supply in the pharmas underneath demand in the banks.
All right, and also it's funny we talk about a stock on the show, FCAU, and 10 straight up days, the old 10 straight up day rule, right? You have to automatically short it. Well, not.
You said that too.
I know. Problem is, I have the 6 day rule, the 7 day rule, and the 8 day rule too. So,
That
but
didn't work so well in those days. But you got it all back.
yeah, so here it is at FCAU. I mean, you got a catalyst, right? We talk about a catalyst, and you got that from, what was that? From the New York or EPA came out with some emissions allegations, and that's all that people needed to stomp this thing and knock out maybe $2 worth of gains. That $11 handle, that was a new all-time high for the issue. So now you're going to have some people caught here on any kind of rally. They're going to be like, oh, I shouldn't have bought that at 1050. If I can get out at 1040, I'll be happy with that. But big, nasty, ugly bar filled a couple gaps. 9 is key on the downside.
I mean, it was a huge sell-off here, so you still start talking 50% retracement. I mean,
Yep.
bulk of the move was from 7 to 11, got down to 9. It did in one day. So I completely agree. 9 is just huge. Bounced off there hard yesterday. 905. I think there's buyers all over the place. I don't think you're even going to get a chance down at 905. I think it gets down to probably the 950 area. Finds more buyers here again. Just people looking, as pullbacks here, opportunity. Stock had a big run. I think this is a short-term thing. And FCAU had been on a run before that. So, would I, be buying it up at 11 now? No. But now that's pulled back significantly here, it's interesting in the lower nines.
All right. Facebook on the move again. We got some analyst action in that, correct?
We do. Raymond James upgrading it to strong buy. Not just buy, strong buy. Price target $160. Facebook has been on a tear. I'll tell you, Fang is back. Kramer's been saying it. He's right. Fang is back this year. Facebook, within striking distance of all-time highs. Amazon, really within striking distance of all-time highs. Netflix made new all-time highs 4 or 5 days ago. It's getting upgraded today, too, by Deutsche Bank here. And then Google, the other one, is just looking itchy and ready to go here. Fang is back, and you know what? I think all these Fang stocks can make new all-time highs, even though I don't like Netflix. I've said that before. I think it's overvalued. But in any regard here, stocks stay overvalued for a long period of time. They all kind of move together, and I think they all probably make new all-time highs here sometime in the near future.
All-time high in Facebook. I believe that was after earnings report. That was over 130. That all-time high was made on the day of the report at 133.58. I was looking at this one on a little bit of a bearish slant because we filled that gap from earnings day. You needed to get up to 126.28, but I'm glad I let it go. It's just when you have a gap fill like that. But Raymond James is coming out ahead of time here and upgrading the stock, so I'll have to see. I'll sit back on this one, maybe see what happens if it gets up to the $130 area. The all-time closing highs, a lot of times I like to give not only the high but the all-time closing high. And I believe that all-time closing high was the all-time high is 133.50. The all-time closing high is 133.28. So ways to go on that one.
130 too. If you can get up another $2.50, that's obviously not happening today. But Facebook, goes on these climbs, and obviously we've kind of seen it coming a week and a half from 115. So it kind of looks like that's where it's got air to is 130. I think it struggles big time up there. Problem is, you're coming here now, you're like going in for another $2.50, and the risk, return probably isn't there as much as it was. I'd like to see, a pullback here and then possibly get in, but not sure you're going to get that either here because this market, you said it yesterday, Joel. I mean, yesterday was a great example of, how this market just comes back. And yesterday we are slaughtered midday on the S&P. And by the end of the day, it doesn't even look that bad.
No, not at all. 20-point rally there. So keeping an eye still back at this 2265 area. Now, when this thing was trading at 2248 yesterday, I was thinking we're never going to see 2265 again. More by the end of the session. If you look at all your closes here in the S&Ps, just let me pull it up here on my data window. I mean, this is very unusual. This is going back to this is the whole year. January 4th and 5th, a pair of closes at 64 and a quarter. 2 days later, a close at 65 even, then a close at 63.65. And then yesterday, you closed at 63.50. I mean, 22. I'm going to be long at 22.66 and short at 22.64. I'll probably do it like 1,000 times before I get it right. But this is a huge area, a huge area for the market today, and we're just hanging up here.
Couple other upgrades or downgrades. Actually, this one's just an initiation, but interesting here nonetheless. Mobileye getting initiated with a buy at Jefferies. Price target $52. Here's a stock we haven't talked about for a long time, and I will tell you, analyst action, on these quiet, stocks that were favorites for a while and now they're dogs. When you get an analyst coming out bullish, it really moves the stock. And you're seeing Mobileye trade up over $1 here this morning on the initiation from Jefferies here. Been quiet consolidation. It's been struggling around this 42. It's where it's going to struggle here a little bit again this morning. But it's been a pretty impressive 2017. I mean, stock, I guess it started a little bit earlier than on the 29th of December. It was down at $36. Got all the way up to $42.98, and it's kind of consolidating here. But Mobileye is looking a little bit stronger.
Now this one you could go. Depends what analyst side you want to take. If you want to go on Wall Street side, in their bullish comments, yeah, you could go with that. 42.50 looks huge on the upside. We spiked up there and quickly came down. That was late December. You also flirted with that 42.50 level in September. Now, if you want to go on the other side of the coin, Andrew Leff of Citron Research, he says that this stock is still way overvalued. So depends which analyst side you want to take. I'm looking 42.50. That's a major level. Not bullish until we can get above that level.
Couple retailers here with some analyst action. Dollar General getting downgraded by Bank of America here this morning. Stock is trading down about 1% here in the pre-market. We're going to talk these dollar stores in a while. And, these were darlings back in the summer. Dollar Tree, if we just go out to the weekly charts, and you look back, or the monthly charts, back in the summer, DLTR got up to almost $100. Dollar General got up to $96. And then they had those disappointing earnings reports, and they punished the stocks. And then they got down in the 60s. And now they've just meandered their way back up. Here we are, Dollar General 73. Do these things interest you at all?
You get what you pay for when you go to those stores. You really, and this is like, I just get stuck on stupid particular things. But Lisa went there, and I don't know what she needed, but she bought some like aluminum foil, for $1. And I'm like, okay, there was like 6 sheets in it, and like I used the foil and it like crumbled. So yeah, it's like, I don't know. I put a sandwich in there or something, and it was stale within a half hour. So I don't know. I don't get these stores. I'm not I never shop at them. Lisa does the shopping there. I don't know. $75. Are we taking that out in the pre-market trading? Let's see here. Just hanging out. Yeah. I just don't have an opinion on these things, long or short, but not in my portfolio, nor will they ever.
Certain things you can buy at the dollar store,
like
certain
what?
Things you cannot. So, that's what I'll say there too. If you want, something, what I like, I bring my kid in there to the dollar store there, that's Dollarama in Canada, and you bring them in there, and, they can just look at everything. Like, they can have, like, a lot of fun. The people in there are pretty good, so I let my kid kind of destroy the whole toy section of the dollar store. At the end of the day, I let him buy a toy, and it's $1, and he's happy as hell. So you can bring your kid to Toys R Us, and, and you just destroy the place in there and they're not happy with you at all, and you're going to walk out with a toy and it's probably 20 or 30 bucks. So I ran the dollar store. He likes it just as much. He's 2 years old. Likes it just as much. Gets to destroy the shelves, play with all the toys in there, and you buy him a toy at the end of that. I'm like, I always say, just pick one, pick your toy, and it's going to be a buck. So
that is dogged.
from that perspective, it's fantastic.
What's it called?
But they're not getting a lot of money from me, and I'm destroying their shelves.
What is it called in Canada?
Dollarama. It's traded on the Toronto Stock Exchange. It's like DOL or something. Dollarama. It's been a good one. It's been on stock. It's been hot.
Toothpaste, shampoo, and deodorant coming from Fuzzy. So
is that why you buy there? I don't know if the deodorant's any good though. I don't know if it works. That's a problem when you buy deodorant from a dollar store and it doesn't work. And then you step out in public and everybody's like, "What's that smell?" That's that cheap dollar store. Remember, what was that from Anchorman? Remember that the cologne? So remember Spencer from Anchorman? It was like Sex Panther.
Yes.
50% of the time, it works every time.
All right, let's just keep it clean here on the show today.
Oh,
dollar condoms.
It's clean. It's smelly, but it's clean. It's smelly, but it's clean.
All right, we got 4 minutes here. Let's look at imbalances here because we're going to get to our guest. My imbalance window is not up. I'm not prepared, Joel. Give me a second here. I got to find the imbalance window. I have to. Okay, talk about a different stock while I bring up my imbalance window.
I want to say
seconds.
I want to say one thing I didn't get a chance to regarding the Facebook upgrade at Raymond James. They also noted that ad revenue should be strong. Facebook said they expect to see 35% ad revenue growth this year, which if you don't follow the digital ad market, Facebook and Google combined make up about 90% of all digital ad revenue goes to one of those two companies. So a 35% growth estimate is pretty strong, and the fact that Raymond James is saying that Facebook will get there is a pretty big endorsement. So whenever you see the terms digital ad revenue online, anything like that, just assume they're talking about Facebook and Google because they have a monopoly on that revenue stream.
I just want to talk about, before you go to the imbalances, RXII got a mention here in the chat. 13G filing from OPCO Health shows a 5.11% stake. You got a little bump over $1 here, up to $1.05. So that's a nice percentage increase. Back down here under $1. So let's see if all the people that bought this thing at 50, 60, 70 cents are looking to get out here. Key going through $1. I mean, OPCO Health, that stock hasn't done a whole lot. Gap to fill, though, and RXII up to the $1.40 area.
It's a whimper at imbalance there, and there's not much standing out. Pfizer, 154,000 a buy. That's somewhat significant here. Bank of America, small buy, imbalance, 66,000 shares. That's nothing, though, because this thing's got earnings, going to trade a ton. Disney, 32,000. A sell, trading slightly down. Disney started to look ugly. That pivotal downgrade yesterday actually did hit the stock pretty hard. We challenged how much it would hit it. It hit it pretty hard. 110 just loomed large there. Could not get over that big number there. Never even really got close to it at 109.50. Now it's at 107.50, and that red candle sticks out like a sore thumb. Looks kind of broken to me. I actually think I'm a seller at Disney on rallies.
Yeah, and looking, you got a nice level to keep an eye on, trading down in the pre-market here. Closed right near the low, so that showed some downward pressure. 07.35, that was your low on January 10th. You hit 04.33 yesterday. I don't know if you're going to get a chance to sell that in the 109 handle. Today, the two-day close, 109.44.
Okay, big levels here. We got 1 minute to talk big levels. And, Disney, we just talked that 110 was a big level, but it couldn't quite get there. Another one that's approaching a big level is Apple. Apple, 120, absolutely enormous. It's psychological hurdle as well. I'd imagine some huge size kicking up there. 2 days ago, got to 119.93, failed. Couldn't get up there yesterday. If it gets up to that 120 area, I always say second time usually works. Third time, it usually takes it out. So it would be the second time if it gets up there today. And I think, I might try it short one more time there off of that 120 level. If it takes out 120, though, that's my bogey. That's my out. You know where, your contingency plan, your stop out is. Above 120, I don't want to be short the stock.
All right, yesterday's high, 1993. I thought we had a double top in there at the 1940 area. Not waiting for this to back off just of yet. On the downside, though, I do see a triple bottom or three lows right at the 118.40 area. So I'll let this thing battle it out between 118.40 and 120, the levels that Dennis just mentioned. Don 33, we'll get to your question here after the break. Dennis is probably more suited to answer that one for you, but we're going to take a break, and we got a good guest to bring on here. That's Nicoa Duke from Future Text Trading. She's going to talk about what she's looking in the markets. We'll be right back with Nicoa.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick and Spencer Israel, working the boards. We have a special guest on today. That's Nicoa Duke. She is an analyst for Forex Analytics, speaking to us from across the pond. Nicoa, how you doing today?
Hey Joel, thanks for having me on.
It's almost the weekend for you, huh?
I know, and I get a free holiday because you have a holiday Monday. Even though it's not one here, I'm going to take it off.
Oh, good for you. So, you have an interesting story about how you got involved in this business. You're an ex Royal Air Force officer and air traffic controller. Share that story with us.
Oh yeah, way back when. So I did a short service commission in the RAF, and then I went to be a civilian controller at Heathrow. And when I got there, prior to me going there, the chemical bank had conducted an experiment, and they'd taken a bunch of controllers to see if they would do any good as traders, and only one of the group that they took made it, which was the woman. And so I was so jealous because I've been trading stocks probably since I was a teenager. My mum gave me my first small account, and I always said, oh, that should have been me. I hope they do it again, and they never did. But yeah, so in my head I was like, wow, I could do that. So
Why? What do you think it is? What do you think the character trait that they were looking for? Working well under pressure, or
I don't know that there are that many. Most controllers are very risk adverse, but I think that you've nailed it because you have to be able to perform when you feel uncomfortable and it's not feeling good and things aren't going well. You still have to be able to do your A game, and that's a lot of the psychology of trading. I think you have to still be able to come back. When you're not doing so well or things aren't going your way. So
yeah,
I
I
would
mean,
say that's probably the best skill.
yeah, when people's life depends on it, I mean, it added pressure. So let's talk about your trading style. Are you like Fibonacci, classical chart patterns? Talk about maybe who your mentor is or who you follow, and talk about your trading style.
Do you know when I started way back when I really learned a very simple. I learned from a forex bank trader, and I learned a really simple moving average, 20, 50 moving average style, and Heikin-Ashi candles, like really basic. Like you didn't need to draw any levels at all. Just you could trend line literally and moving averages. And I realize now what a great thing it was, because we make sometimes it really complicated. I've gone on a huge adventure since then and learned everything about technical analysis, and I'm really into Fibonacci stuff. So I use that a lot to give me horizontal level support and resistance, and I study that a lot. But I would say short time frame, I still go back to those moving averages to see what's going on or to get me in and out. So
And your big 0.382, 0.618, I'm kind of a 50%. That's kind of where my emphasis is. Do you stick with the true
I don't know.
fib?
I don't know if I can tell you my secret fib, but I'm a big 886 girl.
Oh, you know what? I got a buddy of mine that trades the futures, and man, for me, it's hard. It's when it gets to 0.886, and it's going to go the rest of the 12% way. And man, oh man.
Oh yeah, that's when you need. Yeah, that's when you need nerves of steel.
Yeah, that's what I'm looking. Oh, here's the reversal. Here's the reversal. But no, that's.
Nicola, can you explain that? Because I'm not a big fibs guy either. So can you just explain that to the listeners? The 0.886.
So the 0.886. So the normal ones that people look at are the 382 and the 50 and the 618, and then a 786. Well, they're all ratios, and the next ratio, there's an 886 and a 1.13 extension, which is another square root that people don't look at very often. And for me, like in harmonic patterns, which I look at a lot, when you see big zigzags, very often in harmonic patterns, the first pullback is to that 886 level. So that's why it works. And I think if you measure moves, so if you look, like I would say my number one other strategy is very simple, Elliott wave ABC moves. So I'm looking for the 2-wave correction to get in. And in harmonic patterns, it's just a variant of that. So the two swings will be slightly different. One will be 618 to the first one, or 1.618, but there's always a mathematical relationship. And so if I look at them and they all line up on that 886 retracement, which doesn't even show up on most standard platform Fibonacci tools, you might have to add it, but you can add it to all of them. When they line up there, then it looks pretty good for me. So.
Do you have any stocks lining up here today? Like anything on your radar
I'm afraid
here?
I don't. I look at futures and
just futures
Forex.
now. Okay.
So yeah. So, but if I see any, I'll send them over to you.
Well, let's talk Forex.
I look at stock indexes and oil and gold and stuff too. So
we can talk that too. What'd you like to jump into? We can jump into gold, oil. We can talk into currencies.
Gold,
where do you want to go, Nicola?
Gold's got quite an interest. Everything's like very close to a turning point. It's been a really horrible start to the year. I don't know, not maybe in stocks, maybe.
Tricky market.
Very tricky, I think, because I think it's because of where the dollar was. You know, the dollar had gone so far. It was like too high to buy, and it hadn't come enough. Too high to sell, and hadn't come back enough to buy. And so there's been a lot of volatile swings while people overcommit and haven't really gone anywhere. So
what about gold? What do you think of gold here? Because
I think 12
this is something it was something that's been talked about early last year, and then everybody's forgotten about gold and everybody's sold it off in the back half of 2016, and now it's starting to show a little bit of life again. What's Nicola's thoughts on gold?
I'm thinking that there's a good chance gold could still do another leg lower here and still make a new low to sort of 1080, at least 1116, maybe 1080. And I think the same for bonds. And for me, the bonds are very close to a turning point. So if you look at gold, we're at the 38.2 retracement of the swing from the election high. And so, it is one of those places that we haven't got proper reversal price action yet, but I'm watching it. So we could see a turn lower here.
And so that would kind of make you a little bearish on the gold miners too, if gold did go back to test that.
Yeah, and it's funny how they've been outperforming as well. And there's good structural resistance at that level. That's the April 2016 low in gold. It is one to watch. For me, like the bonds, the 10-year is right at that level where I think it's going to turn lower. Above 125.10. We're at the 50-day moving average as well. I think that the bonds could turn lower here, gold could turn lower here, and it's a really great place to buy the yen.
Oh, you like the yen? Tell us about our.
I am actually. Yeah, no, not buy the yen. Sell the yen.
Okay.
I'm long dollar yen. So at 114, I think it's made an perfect ABC correction down into that level for me. So I think there's a really good chance we bounce from here. That might just be a swing in a bigger ABC, but certainly we should get a good bounce from here. And they all seem to be connected, the bonds, the yen, gold.
Yeah,
So
everything's interconnected. So just talk a little
really,
bit about your time frames for your trades. Are you a day trader, scalper, swing trader? How do you like to define your trading?
I like to swing trade. I separate them, so I probably have a longer term book and a shorter term. But my crude oil trades tend to be shorter term, just because it can be pretty funky overnight. If I enter a swing trade though and it doesn't go my way that day, I'll very often take it off and wait. I don't like leaving in futures and FX. It's not like stocks. I don't really like leaving them out there hanging. So but yeah, once I've got a swing on, then I'm happy to ride it. So I pretty much use an hourly and 15-minute entries
All right.
for most things I trade, but I look for setups on a daily chart time frame.
And are you up around? I mean, you have different hours here. Are you pretty much up around the clock? You got a computer in your room, or how do you do it to incorporate the U.S. markets
No,
with your trade?
Yeah, no, I really like the London Open. I sometimes, it all moves before you, and you must get up and think, "Damn it, how's that all gone?" And then sometimes it does nothing all morning, and I think, "Why did I bother?" And when the start of the U.S. Open, everything gets moving. Lately, it's all in your time frame, but I think that's Mr. Trump's doing, and the election and the inauguration.
Speaking of Mr. Trump, you're across the pond there. What's the rest of the world think about Trump coming in, and how do you think that's going to impact the markets in 2017?
I think honestly, it's comedy. That press conference this week was the best comedy show I've ever seen.
It makes everything interesting.
It wasn't like real world. It would be terrifying, but it's quite entertaining. I don't know. I'm open to it working. I'm really hopeful. So we'll see.
Before we let you go, what about Brexit here? The big surprise. I mean, what's going on? I mean, it's been kind of quiet since it's actually happened. What's the timetable? Any chance going backwards on it? Just give us your thoughts. And I mean, the pound.
I'm really hoping they're doing lots of deals behind the scenes, so they can suddenly go, "Ta-da! We've got this great transitional arrangement deal," or whatever. I think people are really underpricing how bad this is for the European Union, and the pound and is being hammered much more than Europe. And I think that people will eventually see that it's just as bad for them as it is for us, but I think in the long run it will be better for the UK. And we've definitely got inflation. The pound won't stay down here forever.
All right, we've been on the line with Nicoa Duke. She's an analyst for Forex Analytics, sharing some of her secrets to the markets. It was great talking to you, and hope to have you on again soon.
Thanks. It was really fun.
All right, it is 848 S&P futures trading up $62 at 65. I'm gonna have dreams about 22.65 here, Dennis. What are we doing? Am I long here? Or am I short here? I mean, it's just such a pivotal number. What do you make of all those closes in the same area?
Buy the dip.
Buy the
Isn't that how
dip.
the market works? Isn't that what always works? Last 7 years, you just buy the dip. Doesn't always work.
Yep. Can I throw out a little caveat here on our bet in JP Morgan here?
Sure. And I'll tell you, I'm only $1.20 away from collecting.
I think it's going to hit one or both of those levels today.
Just bounce around like crazy.
Yeah. I can always remember when we traded it bright together. JP Morgan on earnings is just, I remember it was like, I didn't even have it up on my screen. I didn't even look at it. It was just crazy. So I'm looking for, and right now you're looking okay because they haven't taken it down yet.
You know what it's going to hit? It's going to go to like 87.75, and I'll lose, and I'll miss the bet, and then it'll go all the way down and get me, by like 2 cents. It's like on the Nike bet. And and you'll win that way. You always kind of you get in there and you block it. You put a big order out there to block the trade.
Yeah, I mean, I don't care just to win the lunch bet. Before we,
I'll lose all that money just
before
to win
we went before we went on break here. Don 33 Dennis, he was asking about some of your tips on pre-market trading. That's kind of pretty broad topic here, but how would you like to tackle that?
Again, I have basic strategies, and my strategies, I'm using order flow, so I'm looking, at different things, even looking at the opening imbalances. I mean, that information comes out there at 8:30, and maybe to the majority of people, they don't care. That's how I make my bread and butter. I'm looking at what's looking like it's going to open strong, what's look like it's going to open weak. And if you see certain stocks, like let's say a couple in the sector are going to open really weak, well, it's going to drag down other sectors. So then I bring sympathy in. So it starts like with order flow, and then I bring sympathy trades and looking at other stocks in the sector that might be weak. But the biggest thing, I've got like a couple hundred of the major S&P components on my screen showing me the pre-market trade. So right now I can see lighting up is the financials. They're looking red here right now. Besides JP Morgan, Wells Fargo's down 50 cents, Bank of America's 20 cents down, Morgan Stanley's down 20 cents, Goldman's down 80 cents, Wells Fargo, we are down 50 cents. So the bank's looking a little bit relatively weak. Now I have to think about, there's a lot of news on that today, so that could change quickly. So it's not like a typical day that I say, oh, this is a sell financials day, because there's just so much news in the sector that like you were saying, they're going to be very volatile. So then you start to say, okay, well, I'm not getting a lot of information there. S&P's only up 1 point or 2 points. There's not a lot of information there. What else? Okay, well, oil. Oil's starting to roll over here a little bit here in the pre-market. You got the USO trading slightly down. A couple other oil stocks are looking a little bit weak, but nothing really huge here today. It's a difficult pre-market trade here. Some days things will just jump out at you and say, oh, this sector is going to get hit hard today. And if that sector is going to get hit hard, I'm probably going to sell other stocks in that sector. Today is a tough day. You've got earnings here from the financials. You're coming into earnings season, and it's very mixed. So these are the toughest opens, So pre-market trading, is more of an indicator. I do trade in the pre-market as well. Like if I'm bearish a stock for the open, I will sell in the pre-market if I think it's going to open down. And it's going to go lower than it's trading at in the pre-market. But there's a lot of things to think about here. Pre-market, the imbalances are one tool in your toolbox, but also all the news that's coming overnight here. Like I said, to prepare for my 9:30 open, I start usually the night before. I'm watching a lot of the after hours action, and then I'm starting at least a couple hours, usually 2.5 hours before the market opens, making sure that I know all the information out there, so I don't get caught by surprise on something. And then, I get kind of like a fair value for where I feel, certain stocks should be. And what I do is surround that fair value. So if I deem fair value on a stock like General Electric, which is the stock, I trade every day. Let's say I deem fair value. Well, GE doesn't have anything. I'm saying it's around 31.40. Then I surround that fair value. And I'd say I'm going to buy some, on an opening only order at like 31.30. I'm going to sell it short at 31.50 because I feel it should be at 31.40. And, and I send those orders, and I used to use automation. I still use a little bit of automation, but for the most part, I do it manually now because I feel like I have a better edge. And, and I surround those fair value, and, I'm going to get short some stocks, I'm going to get long some stocks, and then I try to work out of them. And sometimes I get filled on 2 or 3 stocks, sometimes I get filled on 30 stocks on the open. And then it's about working out of those positions.
What's the most you've ever gotten hit on?
I've been hit on like 200 stocks. Like I've actually, like when I was using automation back in the day, I've had mornings, like this is back in like 2007, when, crazy financial, markets, obviously in the financial crisis, I've had like 200 positions. Boom, 9:30 comes, 200 new positions. It's like, whoa. And when that happens, when you get 200 positions, and these aren't investments, these are opening arbitrage type trades. When you have 200 positions suddenly at you, I don't even care about the individual positions. I care about the net value. Am I long $2 million? Am I short $2 million worth? How much am I long or short worth? And then I'm going to go right to the SPY and hedge it because I need to eliminate the market risk. Because if all of a sudden, you get filled on 150 longs and only 50 shorts, well, it doesn't even matter what those individual positions are. If the market starts going down, you are going to get killed. So you got to go and hedge yourself right away. So I go to the SPY and I would sell, an equivalent amount, to hedge myself out. And now I'm market neutral, and now I can work the trades and maybe even take the next 20 or 30 minutes to try to work out of it. So, and the arbitrage itself, from, stocks opening away from where I've deemed the fair value, if I've done some of my calculations correct, hopefully it's going to work out, especially when you have that many positions. And more often than not, on these opening trades, I would say over the course of the 17 years that I've employed this strategy, I usually make money about 4 out of 5 days doing it. So it's fairly consistent.
Do you remember how you did on that day when you got hit with 200?
No, but I'm sure when you get hit on that many stocks and you hedge yourself right away, it almost always works out. Because when you have 200 positions, you are the market. So if stocks all of a sudden open out, Like it doesn't even, individual trades. Okay, well, even if you have a couple out of bad news on them, it's probably going to be a couple of good news on them too, something you might have missed. When you're that big, you are the market, and when you can go just hedge it, with the SPY immediately and get your hedge on, efficiently, like within a second or two, a couple seconds, and it's quick. The SPY, bang, $1 million. Okay, sell $1 million worth of SPY. Boom, we're hedged. Let's go. Okay, now I can work out of the trades. So, that's the difference. And, and I'm trading a lot smaller than I used to too. I'm a little more comfortable. 2007, 2008, I was trading big. And, I still trade, fairly large. But the market isn't, it's not that type of market anymore. You don't get these crazy opens like you did in 2007, 2008. I'm not going to get filled on, 100 stocks opening way away from their fair value, because there's other people employing these strategies too. And it's just tight. The volatility is a lot less right now. When the VIX is down 11, the odds of me getting filled on 200 stocks almost zero. I'm probably going to get filled if I was sending that many orders, if I send 200 orders, I might get filled on 10. And 10, I don't even need to hedge it. I can just work out of those because, if I really, want to hold for a bit, I could hedge it. But for the most part, you can just work that because 10 orders isn't much to work when you've worked 200.
Just a quick note for you people that want to try this at home. When Dennis puts these orders in, they're open only. So after the opening print, they're canceled. So if if you're going out to this and you're leaving a bunch of orders out there, that is the best way to get killed. So just one quick caveat on the opening only
That's
orders.
a fantastic point you just make there, Joel, because why use OPG? It's called the opening only order. And most of your retail brokers have these orders now too. Years ago, it was just the proprietary traders that had them. Most of them, your retail brokers have OPG orders as well. So ask your broker, OPG, opening only order. So it gets filled in the open or it cancels. And why is that important? Because exactly what you're saying. If I'm sitting orders out there and they're just sitting on the book, well, all of a sudden the S&P futures tank 10 points on me, and this isn't the market this happens in. But back when we actually had volatility, that would happen all the time. I'm going to hit on every buy order because my fair value has moved now because of where the S&P futures are. So I'm going to get picked off by all the high frequency traders there on all these sitting orders out there. I'm going to lose on every one of those trades. So that's why it's so key, and right till the very end, you have to adjust I try to send the opening orders as late as possible because, everything is moving. It's a moving target. SP futures fall 10 points. Well, all my fair value calculations before the fall of 10 points are wrong. I'm too high on all those calculations. So, it's fairly easy when the market's, sitting there doing nothing. But when the market's chopping around, going down 5, 10, 15 points, up 5, 10, 15 points, that's why you almost need automation to send those orders all at the last minute or in the last, few seconds, even in some cases of high frequency traders, because the longer those orders sit on the book, the better chance that they're going to become mispriced. As soon as you set an order out there, like a bid or an offer sits out there, it is becoming mispriced immediately. If you, for example, like let's just say I send an order for JP Morgan, which is a great example because there's earnings today, to buy at 86.25. Okay, all of the other, let's just hypothetical example, my order is sitting on the book at 86.25, and I walk away and say I want to own at 86.25. Let's say S&P futures tank 20 points. Well, my 86.25 is way mispriced, and I'm going to be way too high. So obviously that's going to get picked off. S&P futures rally 20 points, I don't get filled. So, it's kind of a lose-lose. That's why I hate just sitting orders there out on the book, because in walking away, you've got to be adjusting those all the time. And that's why, high-frequency traders are very efficient at doing that because they're using all the new information all the time and always moving those orders around for the new information. Big seller comes into the market, they're going to back off because that big seller is going to push the market down. Wells Fargo, Citigroup, Goldman Sachs starts selling off, I got to move my JP Morgan buy order down because that information is going to obviously put pressure down on JP Morgan as well. So, when you're sitting orders out there, you've got to always be adjusting them for the new information. I mean, I guess if you're a long-term investor, you want to get filled at A625, you want to get filled at A625. But I'm looking at smaller little, opportunities, almost little intricate statistical arbitrage opportunities there. And I've got to be quick to move those orders around or I risk getting picked off.
One final note on that: when there is news or earnings or something like that, like you won't trade JP Morgan off the open today, right? On the open.
Sometimes.
Okay.
Typically not on a systematic approach, though. So if I was, having it in a system, no, because it's news. What I would say when I was running, automation on the opening only strategy, which is from Don Bright. Don Bright passed away a couple of years ago, but he was one of the creators of that strategy there way back in the 90s. And Don Bright was fantastic in the strategy. That's still a lot of traders there use today. So props to Don for giving us that. But just going back, I used to run, an automated approach to it. So the first thing I would do is take out all the stocks with news. And automation, you don't want the news in there because if, JP Morgan, let's say S&P futures are down 10 points. Well, JP Morgan has good news today. Well, it's going to open up. It doesn't care if the S&P futures are down 10 points. So if you're running an opening arbitrage system based purely on fair value of the S&P, that JP Morgan order is out to lunch. So you want to eliminate those news events. Now, I've, doing it differently because I'm using them manually. I might have, a fair value calculation. Like JP Morgan's been fairly consistent here this morning, around 86.40. If that stock opens up at 87, I might short it here because it's been trading fairly consistently around 86.40. I might think I might draw back to where it was trading pre-market. Or if it opens down at 85.50, I might buy it down there because I think it's going to pull back up to where, it was trading pre-market. So I'm kind of using the pre-market trading action to give me more of a fair value as opposed to just looking at what the S&P futures are trading if the stock didn't have news.
All right, one quick look here at Fabrinet here for Downward Dog. Been very patient here. I mean, you got a double bottom here to trade off. You sold off after a good earnings report last time, so that's not the greatest news. But, if you're leaning on here, you got a double bottom at the $34 level. Keep an eye on that. We bottomed around 34 in August, so, give it a couple shots here, but takes out 34. Could see some continued downside. Well, I'm giving Spencer, you can have Monday off with pay. Okay.
Gee, thanks.
With pay.
Yeah,
Nice.
with pay. And Dennis, you have to work on Monday.
Because the Canadian markets are open.
All right. Spencer, wrap things up and tell us.
I'm going to Dollarama.
Okay. That we can look forward to.
Yeah. That's it for us today. Good luck, everyone, on this Friday the 13th. If you suffer from paraskevidectriophobia, which is Fear Friday, I think I pronounced that right. Fear Friday the 13th. Then just. Hopefully everyone gets through the day with no unlucky trades. If you missed any part of the show today, you can catch the whole thing. You can rewind it on YouTube, or you can catch the podcast. It's on iTunes, SoundCloud, and Stitcher. Also, you can get a free 2-week trial of Benzinga Pro. It's Benzinga's real-time news platform by going to pro.benzinga.com or by calling us up at 313-723-2000. Please remember that all the informational material and content from our show is for informational purposes only, and not meant to be investing advice. Thank you to Nicoa Duke for joining us today. Thank you to all you listeners in the chat. We appreciate you very much. Hope everyone has a nice long weekend, and we'll be back with you folks on Tuesday. Have a good one, everyone.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.